if you gave me an hour to talk about anything, I'm going to tell you about healthy eating and nutrition. And so, I mean, that's a passion for me. And so real estate allows me to talk, to have some focus on the passion side as well, where I don't have to worry about that providing for my family.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny Catani, and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Welcome to another episode of the Cash Flow Chronicles. I'm your host, Jonny Catani, and I'm joined today by Brad Shepard. Brad is a licensed security broker who helps retail investors take advantage of the upside of real estate ownership without the management headaches, partnering with experienced operators in the best markets to offer pre-vetted, hassle-free investment opportunities. Brad has been involved in commercial real estate for over 20 years, along with his own rental portfolio, a handful of house flips. His experience includes development and management of retail and hospitality space and raising capital from both domestic and international investors. He's been exclusively focused on capital raising for commercial syndication as a broker-dealer representative since 2017. Originally from Utah, after the last 10 years in Austin, Texas, him and his family have relocated to Boise, Idaho. Brad, welcome to the show.
Hey, thanks a lot, Jonny. I'm excited to be here.
Yeah, we're excited to have you. Like I was saying offline, we don't get too many licensed capital raisers, which is nice because I talk ad nauseum about the fund model and kind of the ways around, being compensated for your for capital raising. But you are licensed and can legitimately be, legally compensated for what you raise and don't have to be part of the deal or anything like that. So we're excited to get into that. Let's take it back a little bit though. What were you doing before? What kind of took you into real estate and led you to where you're at now?
Yeah, I mean, and somewhere along the way, in my teen years, I got this idea that, like, I want to be rich.
I think a lot of people can relate to that.
I finally got locked into real estate, and so when I was in college, I did a finance degree, and in between my junior and senior year, I interned with a large commercial real estate firm up in Seattle, where they were wheeling and dealing in skyscrapers and shopping malls in Asia and Europe. I mean, it was a blast. I came back from that. That was the intention still until I got into some, life took me a little bit of a different path. And I stayed with a small little local firm, not in real estate after I graduated college. But in that path, I was able to continue to start building up my own rental portfolio. And then with that company, along the way things ended up going, we were able to get into real estate as a company with that company itself. So the day job was keeping me involved in real estate, where we started buying up historical houses that we could rent out to families for their vacations. And these were in cool, like, touristy spots. And this was, before there was such a thing as a VRBO or Airbnb. But there's essentially that kind of a model. With that company, we had a cool piece of land that we acquired in a really nice spot. So right there, we actually built a store, cafe, some hotel spots. We bought a old 12-room hotel right next door and operated those together. When we moved to Austin, I started doing more of the active stuff, like the fix and flips and wholesaling. Had fun with that for a little while until I realized how much I didn't like it. I didn't like dealing with the contractors and chasing foreclosures and yada yada. And so finally, as I was sitting there contemplating, where do I go with this, the light bulbs went on for me. Well, commercial real estate. And in that journey, I learned about the opportunity to partner with existing successful operators and bringing dollars to the table. And I felt like that was right up my alley. I felt like I could do that. I had experience in that, knew people with money. And so that was 2017. So, I originally started thinking about sponsoring my own deals, but once I learned about the opportunity to raise capital, things started to click into place. And so that's where I've been since.
That's awesome. I love it. Yeah, I did a year in working with a commercial firm here in Salt Lake City, and quickly identified, between my finance background and everything, quickly identified capital raising as kind of my, what I wanted to do as my skill set. And obviously, subjectively, I'd say it's probably the hardest skill set to really hone in on and get good at. But man, that's how much value you can bring and how much leverage you have when that is your skill set. So
Right.
kind of so let's get into kind of the license portion. What licenses do you have? What's that process like? What does it look like in terms of being with a broker dealer and kind of that side of it?
Yeah, fair enough. And I remember, I mean, real quick on that point you made about the finding that sweet spot. When I started flipping houses in Austin, 2013 or so, I met with somebody who was really successful. He was already, building out neighborhoods and whatnot. I, asked him to sit down for lunch, and I wanted to learn about his techniques and how he was, what he was doing, how he was getting deals under contract. And I walked away from that lunch really mad because the only thing he wanted to talk about was, Brad, you've got to learn how to raise money. I'm like, no, I want to learn how to, get deals and flip houses. He said, Brad, you've got to learn how to raise dollars. And man, a couple of years later, I realized, man, that guy was like totally right. It's you hone in on the skill of raising dollars, and you've got a lot of opportunities that open themselves up. So when I started raising in 2017, we were more of a co-GP setup. 2020 is when I went the licensed route. And so that took us, what we had to do was find a broker dealer where we could, that would sponsor us, where we could hang our license. And so that's, the broker dealer walked me through like what tests I would have to take. They initially kind of vet me to make sure that we want to work together. They sponsor me, and then they tell me which series and exams I need to go pass. So I think for pretty much any financial professional now, the first test you take is that SIE exam. So the first step is finding an affiliate, a broker dealer that you can affiliate with. You study and then take the SIE exam. And then for raising dollars for private placements, I had to do the Series 63 and the Series 82 tests. So it's not the 6 or the 7, which I think are probably the most common ones, where you're talking about annuities, life insurance with the 6, or the 7 with you're talking about stocks and bonds. I can't sell stocks and bonds. I can sell private real estate placements. So the 63 and the 82 are what accomplished that.
Interesting. Okay, so you only need the SIE, which is basically the first half of the 7, right? If you want to get your 7, you basically just take, which back when I took it, it was just the Series 7.
Right.
They've now obviously broken it up, like you said. And then the 63 I had as well. That's just so you can trade in every state, right? Like kind of a blue sky type.
Exactly. Like that's the state licensing one, or the state regulation ones, I believe.
And then what's the 82?
82 is the private placement
Got
license.
it. Okay.
Yep.
Okay.
So that's what allows me to sell these syndications. Technically they're private placements, and the 82 is the permission, the ability, the license to do that.
Okay. Awesome. And so kind of touch on now, like I mentioned, right? I've talked about the fund model and you mentioned the co-GP model. So just to clarify for everyone, you can take a fee for the capital you raise, direct fee correlated to the amount of money you raise, without having to be involved in any way with the deal.
Exactly. So my expenses are, I have to pay my broker dealer a monthly fee, whether I have any activity or not. And then my broker dealer is also going to take a cut of every, commission dollar that I earn. So then I have to pay for every state license for every state where I want to be licensed in. Meaning, if I'm talking to a potential investor in Oklahoma, I have to get licensed in Oklahoma. So there are legitimate expenses that come with the broker dealer route, as well as having to run everything through the compliance department and getting their blessing before I send out any tweet or email. Right? I mean, it's brutal. But the flip side for that, the pro side, is it's a very clean relationship with the investor and the sponsor. So the sponsor is able to pay me strictly for performance. It's a percentage of dollars raised. I disclose that. I'm required to disclose that to my potential investors. They know exactly where my incentives are. I get paid $1 for every, or not a percentage for every dollar that I bring in. But I have the fiduciary responsibility to make sure that this, I get to know this investor. I understand where they're coming from, what their situation is. Is this a suitable investment for this individual? So it ends up, lending me a little bit of credibility with the investors as well. And, they can go to Broker Check and look me up and see if I've got any black marks on my record. They can see where I'm licensed. They can see what exams I've taken, and they can see that I have that fiduciary responsibility. And then with the operator, we should have a really clean agreement. That's just, I get paid for performance on their end, so I don't have to do. I'm not involved like the co-GP model. We had to make a case for, we're actively involved in the day-to-day management of these assets,
Yep.
the due diligence, the marketing, et cetera, so we could be part of that GP group. And
then you have to stay involved as well throughout the life of the deal.
Exactly. And it's pretty fuzzy and gray. And the reason we walked away from that and went the license route 2020, we just, most of our industry got a letter from the SEC saying, we're aware of you. No, like, it was not like hey, action is coming. It was, we're aware of what you're doing. Hold on to your records. Don't destroy anything. Make sure you're buttoned up. And that's a pucker moment, right? Like,
totally. You do not want to mess with the SEC. They will strip you of anything and everything.
Exactly. And I got into this to help my family, to help others. I'm not looking to go to jail over this. And so it was, okay, this, sitting down again with our securities attorneys, what is the best route to take? We felt really comfortable where we were, but until we got those letters, and that shook us a little bit. And so, the safest routes, you got the fund to fund path or the licensed broker dealer route. And so for me and my family, and how I wanted to operate, the licensed broker dealer representative route ended up being the most attractive.
That's awesome. I love that. And so for the listeners who may be interested in going this route, I'm interested to get your opinion. Is there a threshold, or when does it make sense in terms of, like, obviously, like you mentioned, you have to pay your fees no matter if you are bringing money or not. So at what, sort of amount would you say it start to make sense in terms of how much you could raise, let's say, per year? Is there a threshold that you think, or you think, just go ahead and get licensed and kind of take on the fees?
Yeah. I mean, it's thousands of dollars. It's not, it's not tens of thousands of dollars, right? Depending on the state, the license might be $80 a year. It might be $400 a year. What I pay the monthly fee to my broker dealer, it's, that gets into the 5 figures on an annual basis. And so I have to be able to offset that just in commissions, dig out of that hole first before I'm going to be making any money. So it's a decent amount, but it's not crazy. I guess I'd sit down and do the math, but I'm in my top of my mind, I'm thinking if you could break that 7-figure amount per year, you're going to be fine, right? You're going to be in a good enough position where you've paid off those fees and you've put some money in your pocket and you're feeling comfortable. And to do that in a year, $1 million over how many ever projects you want to raise for, that's pretty doable.
Totally. Awesome. Yeah, I appreciate that. And so what does it look like? So I know when I was a licensed stockbroker, they were very scrutinous in terms of what I invested in, right? Everything had to be disclosed. Do you have the same kind of compliance and scrutiny in terms of what you can invest in? Can you invest in the same deals you raise for? How does that area work?
Yeah, it's interesting. I mean, so we still have all those same requirements, the outside business activities, reporting requirements. They get anytime I have not a ton, but I do have some money in the stock market. I much prefer real estate, but my broker dealer has to see my stock brokerage statements, and make sure they're okay with that. If I do any big moves there, they have to sign off on that. As far as the real estate side, for me to raise funds, it has to be a deal that my broker dealer has signed off on. They have to be aware of it, go through the due diligence. They look at the deal itself before they'll sign off on it. Then they have to look at the investment summary deck and go through that. And anything that talks about projected returns or anything that sounds a little bit too safe or attractive, they want to scrap that out. So they go through all that stuff with a fine-tooth comb. As far as me investing, yes, I invest in every deal that we put out to our investors. So I've got an equity stake in there. if I were to invest dollars in a deal in a syndication that I was not raising for, um, I likely wouldn't do that because it doesn't benefit me as much as the ones, the deals I do raise for. But yeah, I would have to go get that blessed by my broker dealer as well.
Totally love that. Yeah, that is a big, when I tell people who want to get into capital raising, you've got to be able to invest at least in the beginning, eventually over time, that could change, but you've got to be willing to invest in the deals right alongside your investors, because
Right.
I mean, that's probably one of the first three questions I get asked on
Right.
every investor call. Are you investing in this deal as well? And, I'm even like, as a fund manager, I don't technically have to or need to, right? And you obviously don't as well, but it's just one of those extra sort of measures for investors to feel confident, right? Like, hey, I'm not going to bring you a deal that I wouldn't invest in myself, so much so that I am investing in it.
Right. You're 100% right. Like, I don't have to, I'm serving as a broker, as a representative. I do not need to put money in that deal. My job is to, you know, introduce people, help this potential investor to learn about a deal that might be suitable for their investment strategy. There's nothing that says I've got to go alongside them. Same thing that, there's that same argument can be made with the general partners, the people actually running the deal. They're providing a service, putting all these pieces together, putting this deal together. At the end of the day, they don't have to put any of their own personal dollars into the deal on the on the equity side. For all of us sitting on the sidelines, we think that would be nuts, right? Like, we expect them to be right alongside us. And so, same thing as I'm talking to my contacts about going in these deals, just like you mentioned, they're asking me, "Well, Brad, are you in?"
Right.
Like, yeah, for sure. Yep. And so, if because for them, it's, the real estate isn't their day-to-day stuff. They don't know how to, well, what is that? What is an IRR? What is a cap rate? Right. I'm trying to help educate them. I want them to be educated. I do need them to make the decision themselves. But I know at the end of the day, they are putting a lot of trust in me, for just, because I'm the expert, right? And as much as I don't want them to do it because of a relationship, or a trust in me, I want them to do it based on their own good judgment. I know that that's happening. And so, me being able to say, "Yep, I've got dollars in this one. My wife and I are in on this one. We are riding along the same car seat right next to you. We're side by side here." That's really reassuring to these investors.
Totally. Love that. So, perfect segue here. Let's kind of get into your vetting process and what constitutes, I mean, obviously in your position, you've been doing this now, licensed for 3 years, obviously been in the industry for a while, seeing a lot of deals. Well, it's probably slowed down, right?
Mhm.
Transaction volume is down, but still deals happening. Doesn't mean they're good deals. What is kind of your process? Let's just start initially, right? You get a deal into your inbox. What are you looking for initially to even determine whether or not you want to explore further?
Yeah. So, we have at this point 7 operators that we partner with. And we've gone through a ton of due diligence on that group first. So we have our entire due diligence process that we do on the operator group. And then we start looking at the deal level. And so at this point, when I've got, an operator that I partner with and they send us a deal to look at, we know we have a good history with these operators, and we know which ones have been doing well, and particularly in the last years, the interest rate environment has shifted, and that's thrown everything up in the air. We've learned there's, none of our operators are subpar, but we've learned there's good and there's great. All of our operators are good at managing the assets. What the last year has taught us, there's another element of managing the finances that we have needed to add to our due diligence process.
Ooh, I love that.
And so, at the end of the day, we need these operator groups to have deep pockets. So as any shortfalls come, they can handle it. But we've seen some of the ways that these loans are structured. Before the interest rates went up, it wasn't a big deal on some of these finer details. But even before they went up, the really sophisticated operators had already, they understood all these loan terms, they understood all these parameters, where some of the newer groups, they may not have understood all the details to the point that they should have. And so that allowed, like on one of our deals with one of our operators, it allowed the bank to call the note much earlier than anybody had planned on.
Oh,
And it was
wow.
because of one particular covenant within that loan document. And our other operators had always been careful to keep that covenant out of their documents. And so that added this level of, okay, you've got to be good at not just managing real estate asset, you've got to be really good at managing that financial component of it as well, understanding those loan terms to the nth degree. So that's added one more element to our due diligence checklist on the operator side. What is their financial acumen on, when it comes to these debt structures?
Wow.
Yeah,
That's
and that's
incredible insight. Yeah, that's a nuance. I didn't even think about that as well, is really paying attention to the loan terms. And like you said, right, for the last few years, it hasn't really mattered because,
right.
seems like you could buy something and double it in a year, right? You almost didn't need to be, and not to say that you guys are doing deals with people who aren't good, but I'm just saying, like, it felt like anybody could just walk in off the street, buy
For
100
sure.
and double it without actually executing a business plan. And now we're really seeing, who's naked when the tide's gone out, or however the saying goes.
Right.
Um,
Yeah, and these guys are, the asset itself is just fine. It was doing great. The business plan was being executed well, but it came down to that financial component, and it's yeah. I mean, that tide went out quick, and we saw they weren't wearing any underwear.
yep, totally. So, interesting point to bring up here. Capital calls, haven't talked a lot about them, haven't needed to talk a lot about them. Obviously now starting to be more prevalent, right? You hear it when you go to conferences. It's kind of coming up in a topic. You know, did you have an opinion before this is happening? Have you been through one? What do you tell investors about it? Kind of touch on that. Well, I guess first explain what a capital call is, and then kind of give us your take on it.
Yeah. So that was the discussion happening with this particular property. The short answer to your question is no, we have not needed to do a capital call, but we almost did with that particular property. The capital call being there's a shortfall for the cash flow or the operations of this property, generally because of the financial component, the debt component. There's not enough money coming in to cover the monthly outflow, and that can be remedied by having all the investors, the equity group, pony up more cash in a proportion to the dollars that they put in at the beginning. So that's one option for an operator to save a deal, is to go out to all their investors, ask for more capital. The investors cannot be forced to pony up that capital, but if they don't, they lose. They're going to get diluted, and so their returns are going to be diminished. But they also have to make that consideration: is this throwing good money after bad? And so we haven't had to go to that level. Many of the deals we've had, the operators have paused distributions, typically out of an abundance of caution, and not any really distress issues, but just we're navigating in unfamiliar territories right now for a lot of us, and want to make sure that we don't have to get to a scenario where we need to ask investors for more capital. In this particular deal, we were able to this particular property. We have several deals with the same operator that we helped him raise for, but it was just one property in particular. It was challenged by a little rougher part of the town. Like the day we closed on it, there was a murder
Oh, geez.
at this building, right?
On the actual
On
property.
site. Yes,
Jeez.
yes.
That's
A
a
number of
that's a hell
evictions.
of a acquisition party to
Right.
have.
Well, yeah. Congrats, you're a property owner. Oh, by the way, here are the cops. And you can't do anything with that unit for several weeks. Well, while they're investigating. Yeah, and a number of evictions there. It was just a couple of bad components just on that particular neighborhood that really hung up after this one. And then it was a lender who was gotten to shaky grounds themselves. That's why they called that note, because they themselves, the lender, was facing a liquidity crisis. And so that put this property at risk. And so we were able, as us being the main capital raising group for this deal, between us and the operator, we were able to bring in ourselves the cash to shore up the shortfall, to get a refinance done, to get that other lender out of the picture rather than need to go out and do a capital call for to our investors to have to put up any additional funds.
Interesting. Okay. What were you at, First Republic or what?
It wasn't one of those. It's not one that you'd ever heard of.
Okay.
Yeah.
So was it a bank, like a regional bank, or was it just a
Exactly.
lender? Okay.
Yep,
Wow.
exactly. And they were looking for liquidity, and so they were going anywhere they could to ask for dollars coming in.
And what's the clause that allowed them to call that note? It was like a DSCR type,
It
like, hey,
tied into the DSCR, and it was how frequently they could do it, and evaluate that. And that's where I don't have the financial acumen to talk about it specifically, but at the end of the day, it all tied back to the DSCR.
interesting. Wow. So there was, because of the kind of capital inflow that you were able to do, no dilution for the LPs.
Exactly. So that was the conversation we had between us on the capital raising side and the GP was, do we go out and do a capital call? It's legitimate. These are big boys and girls. Real estate carries risk. Do we go out there and ask them to step up? But at the end of the day, we don't want that on our track record. We didn't really want that to be the the experience for our investors. And so, yeah, we were able to do it as essentially as an interest free loan. And it was just the amount needed to get the refinance done.
Got it. Okay. So just like some GP equity or something to kind of, so
Yeah,
that
it
none of the
ended
LPs
up
are
being
hurt.
a separate equity class,
Oh, nice.
as in a debt position,
So
which we're
has
not, as an interest free loan, so we're not going to see any return on that. Simply wait until that either a future refinance or a future sale, and to be paid back.
That is very classy for sure. And I'm sure the investors absolutely appreciate that. Kind of talk about the communication, right? It's so, so important to over communicate, especially in moments like this. Talk about communication with investors. Were investors stressed? Was there a lot of calls that you had to kind of, take on, or what did it, how did that area go?
Yeah. So for that particular deal, we haven't, if we were going to go out and do a capital call, yes, I'd be dialing up everybody, talking them through it. And that would be, wouldn't be fun, to be honest. As we've had some of these properties that have paused distributions, that's caused a lot of additional phone calls with the investors. What's going on? Is anything at risk? Is, what's the real story? So, communicating, we do ourselves, every property we're involved in, we do it at least a monthly update to our investors for everybody that's involved in the deal. They're hearing from us on a monthly basis, from me, from Brad at Sugar House Investments. In addition to any communication they might get from the operator, they're hearing from me at least once a month with the full story, the full financial package. Here's what we were able to accomplish on the business plan this month. Here's how things stand. And so I know not everybody reads those emails every month, because a few weeks later, I'm getting a phone call from some of them. Hey, I didn't see that distribution come in. Everything okay? Like, well, yeah, we talked about that in that update, but yeah, let me give you the full story. So yeah, that's one of the perks that we offer when in being between the investor and the operator is an additional level, call it additional concierge service, high touch communications, abundance of access. My folks know they can get me anytime, where getting the operator on the phone might be a little tougher. They know they can get me and a response from me really quickly.
That's awesome. I love that. We've obviously kind of touched on, when things go bad. Give us kind of your outlook. Obviously, things are not going to be like this forever. Obviously, you're still bullish. I'm still bullish. Kind of touch on, where you see things going, what you're talking to investors about in terms of, helping them still feel bullish as well.
Yeah. As you mentioned, the deal flow has decreased, and it is end of our second to last deal, end of 2022. That was the first time I had to jump on the phone and start dialing people up to get us to the number we needed to hit for a capital raise. Our final deal in 2022, was oversubscribed really quickly, but it was the first time experiencing that second to last deal. It was the first time experiencing, having to hustle to hit this number, because people, had gotten to a point of feeling nervous. Where are things going? Is everything going to be okay? And yeah, it's still right now, it is taking more work to get these goals met, because investors are wondering about, well, what is coming, what is happening, what's going on with First Republic, what's going on with the Silicon Valley Bank, is where interest rates going to land. The deals are still happening, and we've had some really amazing buys with some properties from distressed sellers, and our operators that had the deep pockets to go in there and get a really good deal and make it happen, even with stricter lending requirements. What we're telling our investors, we've always gone to them with a potential deal saying, hey, this is a potential 3 to 5 or 5 to 7 year hold. But then we ended up, more often than not, it was getting sold in 24 months or 30 months, and everybody's doubled their money and, celebrating and sweet, when can I go again? So what we've had to do is really work to reset everybody's expectations. Like, we really mean it. 3 to 5 years, 5 to 7 years, for real. We're not going to be able to double your money in 18 months, right? Like we had some great home runs like that. It's just a different marketplace. We're back to fundamentals. This is a solid place to keep your capital. I am still much more bullish on real estate than putting my money in the stock market. I love, because in the real estate world, it is fundamentals. You've got a hard asset. It's about, is it attractive for people to stay there, live there, give you their money on a monthly basis in an area that is going to grow and continue to flourish. It's really simple, right? And so as we've got those fundamentals met, yeah, and okay, so it's not going to be 18 months, but it's still a very safe, realistic place to leave your money for 5 years.
Totally.
So
Yeah.
just expanding people's horizons, resetting those expectations has been the discussion.
Love that. Yeah, it's so true. And when you partner with the right people, which obviously you guys, have your vetting process, a big key is that capital preservation, right? Like you've said, withholding distributions, hey, we're doing this as a precautionary measure. Obviously you're still going to get your money. Nobody wants that to happen, but if that's what it takes in order to preserve, investor capital, and, hey, we said there's going to be 3 to 5 year, 5 to 7, whatever it is, and it takes that long, right? Nobody's surprised. But I love that you talked about how you've had to help kind of bring people back down to earth, because things got
Right.
a little crazy there for a little bit, and you were 2x, you were seeing 3x in 18 months. And it's like,
Right.
oh man, how do you tell an investor now that this probably will take all 5 years?
Exactly. It was such it was just a party. And I remember I bought my first house in 2002, and I got maybe, I think it was like a 6% interest rate, which was normal. It was great. And I heard talk about some people getting the low fives. What? That's amazing. And it took me until my third or fourth home purchase, somewhere in 2007, before I got a sub 5 interest rate. And like, I mean, that was the world I, started with. And so these 2s and 3s, like, that was just bananas. And I always was thinking, okay, this is this is short term. And so people talk about now we're in 5s and 6s and we're in this high interest rate environment. Like, no, we're normal. The only people that think this is a high interest rate environment are people who are new to the industry. This is we can deal with this, right? This is something we can work with. Deals are still going to happen. We're all getting, but it is completely a reset of realistic expectations.
Totally. Yeah. And it feels like, the industry is kind of lagging a bit, especially on the seller side. They
Right.
haven't quite come down to earth, talked a bunch about that, but it's coming, right? Especially once we kind of get a little bit more direction from the Fed, which we'll get, as of this recording today and tomorrow in their meetings. And I think by, Q3, Q4 of this year, when things feel more stable in terms of the debt environment and everyone knows what they're working with, on the debt side, I think you'll start to see transaction volume go up, because sellers will finally be like, okay, this is now the world that it is. And if I want to sell my asset, this is what it's going to have to be like.
Right. And that's what we're all kind of dealing with right now, is uncertainty, right? It doesn't matter if it's stocks or real estate. uncertainty kills deals, and it just, makes the markets muddier, sluggish. So once we get more certainty in place, yeah, I think, if we'll be able to get back to normal and keep things moving forward.
Totally. I love it. Well, Brad, I really appreciate all your insight. I know the listeners do as well. It's always good to get a fresh perspective on things, being licensed and kind of get an idea of how that works. So go ahead and wind down here. We'll jump to the final five. First question, best advice you've gotten from a mentor?
Team up. I for the bulk of my career, I've approached it as a lone wolf type of a sport. As soon as I started teaming up with operators, other capital raisers, we've been able to do a lot bigger deals, end up being more, financially rewarded for doing it. Yeah, is the sooner you can find some folks to partner up with where your incentives, motivations are aligned, the sooner the better.
Totally. Love that. What is about your career that makes you feel like you're fulfilling your why?
Real estate is it can be complex, but at the end but the vast majority of the fundamentals are really very simple. I like investing in assets that I can touch. I can put my hand on it, and it helps. It's exciting for me to be able to go to people who are looking for education around real estate, alternative assets, and play a teacher role. I really do love educating people. On the more to the why, my wife and I, our big passion is healthy eating and nutrition. We see ourselves owning like a little organic food store, doing a little farmers market booth, and you can't really do that that kind of stuff and raise a family on it very comfortably. But real estate provides the funds to be able to for us to have that kind of flexibility to do to scratch that itch as well. I do really like real estate, but at the end of the day, if you gave me an hour to talk about anything, I'm going to tell you about healthy eating and nutrition. And so, I mean, that's a passion for me. And so real estate allows me to talk, to have some focus on the passion side as well, where I don't have to worry about that providing for my family.
I love that so much. Yeah, real estate is not who you are, it's just what you do, right? And it can really provide that foundation so you can go do what you want. And I love that. And I love that you love to help people. That's a big key that I learned getting into this industry is it's really about the education piece, and then the investors come later. So
yep.
Love that. Favorite non-real estate or investment related book?
Man,
You got a healthy eating book for us? What's a good food book for
Fiber
listeners?
Fueled is the last one I listened to, and that was a really good one.
What is it?
Fiber Fueled.
Fiber Fueled.
There's so much information coming out about our microbiomes, the bacteria in our gut.
Yep.
How critical and impactful that stuff is. And it turns out sugar feeds the bad bacteria, fiber feeds the good bacteria. And it's my mantra. The takeaway from that book is diversity of plants. It doesn't advocate against meat or anything like that. We love meat, but throughout the day, how many different plants can you get into your belly? Because they all have different fibers, they all feed different bacteria. Diversity of plants. So every time I'm sitting down at a meal now, I'm looking at my plate. How diverse is my plant selection here?
Totally. Yeah, I've been on kind of a whole food diet, that same kind of concept for about 3 years, and what a world of difference in terms of like, I still play sports, and in my performance and in recovery, it's crazy. But what's so wild is how we're just barely learning about the gut biome and how important it is, and like leading to everything, including all the way up to your mental health, even the things like that. It's so crazy, and if ever I feel off, almost always I can recount what I've eaten in the last 24 hours and find something that was what I shouldn't really be eating. And it's like, okay, well, you can't really, be mad that you don't feel great when, you ate, 2 bowls of fruity cereal, as a snack before bed or something, whatever it is. So
totally. And the fact that that is so empowering. And that's what I love about that conversation. My wife has rheumatoid arthritis. She's been officially in remission for coming up on 14, 15 years, which is when we changed how we eat. She knows she could make a choice and eat that bowl of ice cream or that snack or whatever that does that, you know, she wouldn't typically eat, but it's a trade-off for her. She could enjoy that now, and tomorrow her joints would hurt, but she's in control. Just the fact that she knows that is so empowering. And that kind of information is huge, where it's, yeah, you can pin it back to that bowl of Fruity Pebbles or whatever it was. And you know, but you know now, okay, that's a choice I get to make, rather than just feeling it like you're a victim of your body breaking down or whatever.
Totally. Gosh, I love that. That's awesome. We may have to do a food. May have to have you back
Right?
on talk about food. I mean,
Let's do it.
I love it. If you could have any superpower, what would it be?
Time travel. Right.
Nice.
I mean, I enjoy history. There's so many things I want to go back and see. Like I want to see the film of, you know, dinosaurs and Earth being created, and people I'd like to have conversations with. Time travel would be, I mean, that'd be amazing, right?
Absolutely. Yeah, love that. Totally. Awesome. Last one. What's the best way for people to get a hold of you and learn more?
Thanks for asking that one. Best place to get in touch with us is on our website, sugarhouseinvestments.com. My email is brad@sugarhouseinvestments.com. That's where you can learn a little bit more about us, our team. Put your email address in there if you want to see our deal flow or schedule time to connect there.
Awesome. We'll link it in the show notes, make it super easy. Brad, thank you so much for your time. This was awesome.
Hey, thanks a lot, Johnny. Had fun.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to KataniCapitalGroup.com to learn more.